Alex, how you doing?
I'm doing great, James. How you doing?
Doing great. It's good to see you. You ready to talk stocks?
Yeah, let's get right to it.
Let's do it. First question for you. When people say they're afraid to invest, oftentimes they'll phrase it as it feels too risky. Is investing risky? And what do you think they're referring to?
I think a lot of the time when you hear the phrasing of "is it too risky," you know that they're really talking about the volatility in the everyday market. It's those ups and downs that the media loves to emphasize both ways. And I wouldn't say that it's too risky because, right, if the market was too risky, no one would do it. But what happens is if you can approach it with a logical, strategic plan and not react to the emotions in the volatility, you're going to do way better than if you were reacting otherwise.
For the sake of clarity, as it relates to investing, define risk clearly and then volatility as well.
Yeah, so I'll start off with volatility. And again, volatility is the everyday ups and downs of the market. My $100 stock being up 3% and then down 3%. This is just part of the market. That should just be expected. When I make an investment, it's going to be volatile. It's never just going to go straight up and it's never just going to sit there and be flat. It's going to have movement in the price. And we want movement in the price and hopefully it goes up from there. Risk is when I allow volatility to affect me and I lock in my sale when my stock is down and there is now permanent loss. And that's the clear thing to talk about here is if you allow your emotions to get to you, if you start thinking illogically and you do panic because of volatility and you just sell because your stock dropped, that's how you turn volatility into an actual risk. And if that's your approach, then investing is too risky.
That's great insight. And it's almost if you take a short term approach to investing, watching those highs and lows for sure does feel risky and would carry a heavy emotional weight.
Yeah, it's funny how psychology comes into play with investing in something that should be really logical. And it's just not that way. When you think about it, like when I buy a stock, I'm making a decision and hopefully did really good research. And it's impossible to be right all the time on stocks. They will go down. And it just feels really impactful when you buy a stock and it goes down, especially when you're new to investing, because it makes you feel like you made a mistake. And personally, I can relate to this a lot because I learned all of these lessons when I was early on with investing. If you've known me long enough, I've probably told you my Twitter loss story. And I also tell it again in my recent video around the 5 mistakes that I made that have been big for me as an investor on YouTube. In the Twitter story, I talk about how I invested in Twitter not really understanding what Twitter was about because I didn't really use Twitter and the stock went down. They had really bad earnings, and I decided to buy more. So I doubled down on my already bad decision. And that thing really stuck with me for a long time. And I can easily talk about my losses way more than my wins. And that's that human psychology of we just remember that as a really big loss. And I've learned how to accept it. But as a new investor, it's really important to kind of recognize when that's happening. So you don't let any of this emotional thinking wreck your plan because that's exactly what happens.
A new investor hearing that might think, well, I shouldn't invest at all and have that risk, if you will. But there's another side to that where actually waiting is a risk in itself, right?
Yeah, that's right. And what's funny is the response of, I just need to wait then. I'm not ready to invest. It's your brain protecting you. It's you coming up with the reason of, "Oh, that sounds scary and new, and I don't really understand it yet." And the most comforting thing that my brain can do is tell me that it's gonna be okay. And what happens is, let's say the market goes down and you were like, "I'm going to wait to invest." Well, guess what? You just got rewarded because the market went down and your brain is like, "See, I told you, you should not invest right now because the market was gonna go down." Now, on the flip side, what happens if the market went up? then you're like, "Well, I should have invested." But then your brain's gonna be like, "Well, you were careful though, and that was good because the market could have gone down." So you're coming to the same conclusion no matter what, and that's where the waiting idea comes into play, and it can get scary because waiting is a decision that I think a lot of people don't really factor in, that it's not the safest thing to do always.
That makes sense. So you don't want to be too risk adverse. You're never in the market. What's the correct perspective then to have with these market fluctuations?
I think the best perspective with the market fluctuations is that it's going to happen. And if I press that buy button, I just have to accept that that stock is not going to go up in a straight line. And in fact, it might pull back a lot. But if I'm sticking with that long term mindset that we've talked about a lot so far, that will help get me through these volatile days. And it's also really important to keep in mind that your emotions will get in the way. And if you're checking your phone a lot, if you're checking your portfolio a lot and trying to get all of these updates, what could be just noise for the day might lead you to making a really bad decision that could affect you long term. So that's the other thing I would highlight here is you don't need to check your portfolio all the time because this will make you have way more stress and emotional reactions.
So if market volatility, as well as your own uninvolvement or not being in the market, both carry risk, what's the right perspective to have as you navigate both?
Yeah, that's the great question, and it really is a balance there because on one hand, you need to think about where your budget is falling, and money that I'm putting in the market is money that I don't need anytime soon. So if there's money that I need in my life for other costs, that's not what we use to invest. We use the money that falls in the budget that we can actually put aside to invest. So that would be the first thing to think about. But when I'm ready to put the money in, really it's about making safe bets based off my time horizon and diversification of how I'm investing that money from there and allowing the compounding and good habits to kind of build.
So, how does someone move forward without feeling reckless?
I think the best way to go about that is sticking to a plan and coming up with a plan before I do anything. That way I can just stick to my plan, be intentional with where I'm putting my money, and then I'm taking away the opportunity for emotions to come into it if I'm just following my plan. So that's the best way to not be reckless is to have a plan, stick to it, and then making sure that my mindset is focused again on the long term.
So, market volatility is normal. Not being in the market is a risk in itself. What is the main thing you want us to take away with from this episode?
Yeah, I think is clearly understanding the difference between risk and discomfort. And remembering that volatility is part of investing. It's always going to be there. And kind of like most things in life, if there was no risk involved, there would also be no payoff. You have to accept that the reason I can make money in the market is because there is the unknown in volatility. If I stick to my plan and have a strategy about it, there is no better way for me to stay focused and make sure that I'm making the best decision I can at the time.
So, this episode, we redefined risk and encourage people to move forward with a plan. I'm excited about this next episode as we talk about what you would do if you were to start over from the beginning.
Yeah, I've talked about all the mistakes that I've made. I wish I could go back and start over again, and we've talked a lot through these episodes. So I really look forward to kind of bringing everything together and really sharing a good approach for next time.
Alex, thanks for talking stocks.
No problem. Let's chat
We'll,
soon.
we'll talk soon.